Hello and good day to everyone. And we are here as a group to tackle about the materials management system. The materials management system is a method for planning, organizing, and controlling the activities that are related to the flow of materials in a hospital. It is the management function of hospital materials to ensure that services are rendered successfully from one source to an end user. And this is done via softwares and is done digitally. Materials management system involves several areas of the hospital and is executed in a manner that is cost effective with effective management of information from several sources. To manage information, hospitals implement a form of materials management information system, which can be used to manage functions like purchasing, accounting, inventory management, and patient supply charges. Moving on to purchasing. Here we can see a diagram which showcases the three processes involved in purchasing process. So to start, we start with the first process called purchase request. This marks the beginning of the procurement process. The user notifies the purchasing department about the needed items or services with information such as quantity, time frame for the requested items, and authorization to proceed with purchase. The second process, which is the purchase order, wherein the items are confirmed via purchase order and a supplier is nominated and is sent to the supplier for processing. The last process, which is the receiving delivery, wherein items are checked during the receipt of the delivery and the receiver uses the purchase order as basis for accepting the delivered items and is checked for damages or indents on to the received items, and when that is clear, it is released to the requesting department after. Moving on to inventory control. Inventory control is the effective tracking of item movement in and out of the facility, combined with usage analysis and stock management. Inventory control play an important part in improving the quality of healthcare services as many people, such as patients, are relying on this concept. So here are the strategies in improving inventory control in health facilities. The first strategy, which is ensuring shipment accuracy, is the thorough checking of shipments to ensure that the received items are the ordered items and are free from damages during transit. So we do not want to receive an item that is not what we requested, and we do not want an item that is damaged. So we must make sure that it is the item that we requested and purchased before it is released to the department that is in need of that item. Second strategy, which is aligning with sales projections, we create inventory tracking reports in comparison to actual sales, which this is necessary to prevent wastage, excess inventory, and also to identify trends. Third strategy, which is complying with regulations. Health institutions should be responsive to the trends and needs of the highly regulated healthcare industry. The regulators monitor health institutions and determine success or failure of companies to serve the best interest of patients. The last strategy, which is establishing buying cycles. Understanding buying cycles based on previous buying cycles to properly manage inventory via the elimination of shortages and overages. So moving on with item master maintenance. The concept of this revolves on the usage of materials management system to have an easy accessibility to inventory information. So here we can see a user interface of a materials management system. In this system, the inventory item maintenance screen has many sections, wherein the upper portion contains the master information. This portion contains all of the information of all of the items that is registered in the materials management system. And an additional option can appear when selecting an item. Item tab is used for maintenance of the attributes of an item, such as product type, and item class. The item availability form specifies inventory levels across all warehouses. So here we can see a picture of a user interface of a materials management system which showcases item availability.
Next, item indents and issues. There are some instances when items are damaged either upon from the supplier or during the move to another location. Items were damaged during transaction because there are instances that an item is not packed well. Some supplier allow return of an item that damaged without any replacement fee, and this will apply to the distribution retail industries for faster transaction and move to another warehouse for them to be monitored of the issues. Reorder level and minimum and maximum inventory ordering. Reorder level is the minimum quantity of an item that a company has in stock. If it is in the reorder point, this is the time a company would make an inventory and place new order or restock. Also, reorder level depends on the company work order. Minimum max inventory reordering method is the basic reordering method in many ERPs and other inventory management software. What is ERP? ERP, also known as Enterprise Resource Planning, is a process used by companies to manage and integrate the important parts of their business. The meaning of minimum max inventory reordering method is value represents a stock level that triggers to reorder or restock an item. And for max, value represents a new target stock level.
Inquiries and quotations for drugs, consumables, assets, and general items. Number one, inquiries. The inquiries mark at the beginning of the purchasing process. The supplier provides information in availability and price of the required items. Number two, quotations. Quotations contain vital information regarding the requirements, which include price, delivery, details, payment terms, and etc. Number three, orders. A purchase order is used to indicate a company's intent to engage in commercial operations for a certain product or service. The order becomes a contract between the healthcare institution and the supplier once both parties agrees. Number four, invoices. An invoice is called a bill. It is a commercial document that indicates product, ordered quantity, and the agreed price. Number five, documents are statutory requirements used during purchase and sales transactions. This ensures smooth transition and completion of the process. Comparisons of quotations and preferred vendors. Purchase quotations is a document for requesting prices and delivery information from a vendor before the purchase order. It helps in lessening expenses, improving the quality of the product or service, and increasing on-time delivery. A purchase quotation report allows the comparison of offers in order to pick the appropriate vendor for the purchase scenario. Afterwards, the purchase order can already be created from the selected quotation. Preferred vendors, from whom inventory items are usually purchased. They look for a vendor who has on-time performance, offers reasonable costs, provide high-quality products and services, offers fully licensed, bonded, and insured products and services, and has good business practices.
Next, purchase request, orders, and approval. Purchase request or purchase requisition is a document that notifies the purchasing department that certain items or services need to be replenished. The document stipulates a time frame and required quantities for the requested items. In certain instances, it also contains authorization to acquired assets for enhanced accountability and for the documentation purposes. Some companies required a purchase requisition for all purchases, but others only required that them for specific kind.
kinds of purchases, such as those that would require greater capital outlay. Purchase order is a legally binding contract which shows that the seller has already accepted the order issued by the buyer. It should contain information about the buyer and seller. They have a name, address, contact details, and etc. Order number and order date items descriptions, quantity, unit, and total price. Shipping information, shipping dates and address, billing address and authorized signature. Lastly, approval process. The person who creates the documents, either a purchase request or order, is the originator. When the said originator adds documents to the materials management system, the system checks for any approval requirements. If the document fails to meet the approval requisites, the originator is notified that the document needs approval. The document is temporarily saved as a draft. When the approval process is launched, an internal request is immediately sent to the first approval stage. This request is received in the Messages or Alerts overview window, and the approver can access the document. The approval can be done through a mobile phone if the devices are integrated. An internal notification goes back to the originator with a link to the rejected document when the approver rejects the document. The originator can amend the document and the approval procedure will continue until the conditions are adequately satisfied. Receiving and tracking items. The following policies should be followed for the proper receipt and inspection of goods. Number one, signing for deliveries. The person who receives the delivery should inspect the delivered items before signing the receiving documents and the packing list. Then, the documents should be submitted to the appropriate department for reconciliation. Number two, refusing delivery. The receiving department should refuse to accept any shipment if the packaging appears to be damaged or if there is any item that does not have a corresponding purchase order. Number three, record retentions. The packing list should be provided to the receiving department during delivery to ensure that there is a proper documentation since it is a taking possession and legal ownership of the delivered items. If no list was provided, the department should request the copy from the supplier. All files should be kept according the guidelines of the entity. This helps track partial and staggered deliveries. Number four, inspecting a shipment. The personnel receiving the item should inspect the goods to ensure that the following minimum conditions are met. A. The receiving items match the requirements stated in the purchase order. They have a type, description, color, and etc. B. The quantity is correct. C. The item has no damage, discolorization, and issues. D. The quantity per unit of measurement is accurate, 1 dozen or 12 pieces. E. Packing list, certification, and other delivery documentation are completely provided. F. Perishable items should be in a good condition and have not reached the expiration dates. And lastly, G. The items are functioning properly. Number 5 of receiving and tracking items is partial deliveries. When items are delivered partially without proper notification from the supplier, the receiving personnel should advise the purchasing department for approval and further instructions. This should be also typically noted in the packing list or the receiving document. Lastly, number 6 is tracking of goods. Goods can be easily tracked or traced when they are managed by serial number or batch. True that aging of product can also be monitored based on how long they have been in the warehouse.
So we have the purchase returns along with returnable or non-returnable gate pass. So in the business world, it is common to commit mistakes and conflicts such as defective or substandard products, incorrect delivery of orders, and damaged items bought and sold. These lead to buying or selling returns. When purchased products are returned, the materials management system updates inventory levels to reflect the decline in quantities. Inventory movements are not limited to purchase returns. Sometimes supplies and equipment also need to be removed from the department for repair or shipping. For temporary movement, a returnable gate pass is issued, whereas for permanent movement, a non-returnable gate pass is given. The system can be configured to track returnable and non-returnable items or equipment. It can also be set to monitor due dates for returnable items and to provide detailed reports about the status of different inventory items. So in this given example, we can determine what returnable gate pass and non-returnable gate pass is. So in simple terms, material gate pass management system is associated with the material management system. It is because the gate pass management system is a solution that keeps track of all materials entering and exiting your facility right from the origin of request for such a movement until it reaches its final destination. So we differentiate returnable gate pass to non-returnable gate pass. A non-returnable gate pass is issued for materials that exit the premises and is returned, or materials that enter your facility and has to be sent back. So a non-returnable gate pass is issued for materials that enter the gates of your facility and do not exit, or exits your premises and is not to be returned. So with this example, in the two portion, you have to indicate in which service or establishment are you going to deliver the materials. And the date should be emphasized when you have filled out the form. And you have to check whether it is a returnable or non-returnable items. And the expected date of return, it is simply the estimated time, specifically if it is in returnable materials. So in the material description, we have the item numbers, particular description, and the quantity. In the particulars, we just have to indicate the product name. The description, you have to indicate here what is the problem, what is the issue, and the information of the product. And the quantity is the number of the products presented. So we move on to the consignment, stock receipts, consumption, and regulation. So in the consignment process, when we say consignment, it is just simply means shipment. The seller or shipper delivers the material to the recipient, and these materials are stored at the recipient's premises. When we say premises, it is an establishment, a building, and that's it. The seller retains legal ownership until such materials are removed from consignment stores, and the invoice is due at the predetermined intervals. In addition, customers can also arrange to take over ownership of the remaining consignment material after a certain period. So we have here the consignment process, which is deciphered in three steps: the procurement, consumption, and settlement. In procurement, a standard purchase order is created with item category as K. What do we mean by procurement? It is the action of obtaining or procuring something. So in this given example, the stock is posted as consignment stock without value. The same would reflect as a special stock for the vendor since the material lies in the purchaser's premises. The same would be reflected in terms of quantity at a storage location as well till the time the same is consumed for use. Next, we have the consumption. So consumption means the using of a resource. In this particular case, consumption of consignment materials happens when good issues or issue is done with item category K. So to elaborate the process, a production order was created and a goods issue was done with the item category K against the production order. Generally, the consignment materials are part of bill of materials or which we call BOM. The goods issue document is posted in such a case when activity confirmation is done for the production order. So the settlement is the last step of the process. That means in economics, the settlement is the delivery of securities to complete trades. This would display the withdrawals from the consignment stock which have taken place and for which the liability of the vendor has not been created. You also have the option to check the accounting entries for the withdrawals for consumption made from the consignment stock for a vendor.
Expired stock and quarantine. Expired stock or inventory. According to Cateman 2017, upon reaching their expiration dates, some goods, such as food and medicine, can no longer be utilized. In rare instances, they may be sold to other parties at lower costs. Expiration dates and decrease in values of items must be reflected in the financial records so discrepancies in financial statements will be prevented. The amount that reduces inventory in the records is recognized as a loss, which equates to a reduction in profit. Next is quarantine stock or inventory. When undecided about how to handle defective goods, whether to be sold as a scrap, reworked, returned, or used as it is, a quarantine location or warehouse can be used to temporarily house them until a final decision is reached. According to Infor LN Warehousing 2018, inventory is put into quarantine if it is initially rejected during production, upon completion of an operation, when specified as move rejected end item to quarantine. Inbound inspection upon receipt of manufactured end items, purchased items, sold items on sales return orders, enterprise planning distribution orders, outbound inspection upon issue of materials to production. Next is drugs and consumable issues and returns to patients. Nagarajan 2017 affirms that 30 to 50% of hospital charges are actually attributable to diagnostics, drugs, and consumables, and doctors get only between 10 to 20% for both hospitals and patients. Drugs and consumables take up bulk of expenditure. This is why materials management is critical for hospitals to optimize the investments in these kinds of consumable assets. While some hospitals have functional inventory databases, the lack of integration does not give them holistic information, and this affects decision making, both on managerial level and during day-to-day operations. For instance, some drugs are misplaced or misappropriated, or shortages and surpluses may occur as a result of improper inventory controls in a traditional system. This is where materials management system becomes advantageous. It provides an overview of the entire institution's purchasing and inventory control processes. As a result, decision makers can have more reliable information and can monitor the bigger picture.
Now let us discuss the topic issue methods. Inventory management is a crucial function for any product-oriented business. Common inventory handling methods include A. First in, first out, FIFO, Inventory items are sold based on the order they are purchased. This is the most common technique. So if a certain company purchases certain items and or product first and then they are sold based on the order, then that inventory handling method is called first in, first out, FIFO. Next is last in, first out, LIFO. Last items to enter the system are sold first. This is common among non-perishable items like petroleum, minerals, and metals. Since these items are and or products are non-perishable, take note of the word non-perishable, then it doesn't really matter what items are sold first. To make it easier, last items to enter the system are sold first. Another inventory handling method is called first expired, first out, FEFO. Materials are sold based on the dates they should be consumed, regardless of when they were purchased. So this is where the items and or products that are perishable enters, since they have expiry dates. Next topic is generic tax formula configurations. Materials management systems usually allow tax rates to be defined internally via tax codes or imported from an external source. Tax configurations are usually accounted on a per-country basis. The following taxes that can usually be processed while posting documents are tax on sales and purchases, additional taxes like value-added tax, known in some countries as a goods and services tax, GST, a type of tax hat, is assessed incrementally. It is levied on the price of a product or service at each stage of production, distribution, or sale at the end consumer. Next tax is sales and use tax in United States of America, USA, and withholding tax like income tax in India. The autonomic calculation of the tax dues during the purchasing process makes the process less susceptible to clerical errors. So what does this mean? It only means that if we do not make the autonomic calculation of the tax during the tax dues during the purchasing process, then it only makes the clerical errors more prone to clerical errors and it is very risky. Next topic is periodical physical stock taking and adjustments with tracking. An inventory count is a process where a business physically counts its entire inventory. A physical inventory may be mandated by financial accounting rules or tax regulations to place an accurate value on the inventory. Or the business may need to count inventory so components, parts, or raw materials can be stocked. Businesses may use the following tactics to minimize the disruption caused by physical inventory. CTI Reviews 2016. So the following tactics are: inventory services provide labor and automation to quickly count inventory and minimize shutdown time. Inventory control system software can speed up the physical inventory process. A perpetual inventory system tracks the receipt and use of inventory and calculates the quantity on hand. Cycle counting, an alternative to physical inventory, may be less disruptive. The materials management systems offer all of these in addition to the barcode and RFID capability, which are supplementary technologies placed to give the institution more accurate and less burdensome inventory counts. So that's it.